So let me ask you this. There's always like these viral trends of what's considered a good investment, and you watch these YouTube videos, and people are telling you to put all your money in meme coins and these coins that have no value, and it's this constant fight between viral trends and intelligent, sustainable investments. So first and foremost, why do people fall for the trendy financial advice?
Have you ever seen the old shirt or saying where it says like the person who speaks the loudest in my family wins the conversation? It's kind of that thing. Like
Yeah,
sometimes people just have like they have this shinier looking thing and and it looks fancy. Like I don't know if you've seen in the news, Kyle Busch is suing an IUL company for like $8 million, saying he was frauded for that. Like so, it's just
mm,
there's a lot of stuff out there, a lot of information out there. Be careful what you're looking at. Um, but don't be afraid of it. That's the problem. See, people fear what they don't understand. And like you were saying with the vernacular or the particular jargon, the lexicon that we're using inside of finance, people just get lost in it. That's why, like I said, one of my main things is Main Street meets Wall Street. I speak simply so I can break it down simply to folks as well.
yeah. So if someone comes to you with a financial advice or a recommendation of what you might want to consider investing on. Like, what advice would you give to someone as like key markers to kind of filter out, at least initially, what might be a good idea, what might be a bad idea, what's worth looking into, and what seems like too good to be true or likely just a risky investment?
Well, if it seems too good to be true, it probably is too good to be true. But if we're just sitting back and talking about a particular investment, like if 90-year-old person comes to me and wants to buy Bitcoin, I'm going to ask them why. Like, tell them leaving this Bitcoin to their grandchild, because I mean, there are times when age doesn't necessarily make it a part of your risk tolerance. People always assume that because you're older, your risk tolerance is going down. But depending on what you're using those investments for, like if you're leaving them for someone else's inheritance, you might want part of that portfolio to be more aggressive, right? You might want to have more aggression. So just figure out why you want to invest in something. Don't invest in something just because everyone else is talking about it, because it's the hot topic. Just step back, take a second, sleep on it, sleep a couple of days on it, call someone else and talk about it,
That's
right?
actually great advice. That's actually great advice to sleep on something. You should make a rule that from the time that you heard about the investment and the time you make the investment, you should give yourself a week or some time frame because there's real terms out there, FOMO, fear of missing out,
Hmm.
right? Where it's like you jump onto something, but you realize that it goes up and down all the time. And a lot of times when your friend is telling you about an investment or a stock, it's often too late. You're chasing the market. And you're really just serving as exit liquidity for smart buyers. I mean, when your mom tells you to buy Bitcoin, that's a real serious concern. That means that you're dealing with a bubble and that the market is just oversold and it's going to correct, right? So overbought. But and then with like gold, where you see photos of people lining in the streets to buy gold, like that is a horrible idea. When retail is buying an asset, that's when all the smart people who have pivoted early, who have studied the market, have already taken their position. And you're coming at the very top and you never want to be there. So the secret here is you don't jump on something because someone tells you about it. Do your homework, monitor the process, maybe put $1 in the stock and just see how it goes for 2, 3 weeks. Get a feel of how these things work. And then you can start inching your way to becoming more of a professional and just making smart decisions. Would you agree with something like that? And would you add anything to that?
Right. Yeah. Yeah. No, that's actually some solid advice. And you mentioned FOMO. The opposite of that, well, not even the opposite of FOMO is let me remember the acronym. F around and found out, right? Like that one too, because
Yeah,
that could be the opposite side of that FOMO. You jump in there and you find out that like this is a real
right.
investment, this is a real thing. Like, oh my God, I just lost that money. Like, don't.
Yeah. And it's
There's,
hard. It's harder than money.
yeah,
Um,
if everyone's talking about it, it may be too late. Don't try to buy the highs. Don't try to buy the lows. It's hard to time the market. Very
yeah. And
hard to
it's a
time the
secret to
market.
know that most people lose money in the market. I think 90% of people lose money in the market. And you have to understand who's that 10%? These are people who are extremely well educated. They've been doing this for years. They've got institutional money. They've got financial advisors behind them. This is who you are competing with. So just keep that in mind when you make these investments, that, you really want to be patient. And if you were to know nothing about the stock market and you were to do the exact opposite of your emotion, whenever you feel euphoric, whenever your friend tells you something's pumping, it's doing great, you do the exact opposite to say, oh my God, it's going to keep going up. No, you sell. And when everyone is saying, this is horrible, this is crazy, it's a bloodbath, everyone's selling, Bitcoin is crashing, it's going to zero, that's when you scoop up.
You're a
And that's
contrarian,
what smart
Michael.
people do.
You're
Sorry?
contrarian. Contrarian
I
investment.
don't even
That's
think
what it's
that's
called. A contrarian. That's what it's
the
called.
contrarian trader. Right,
Yeah,
right,
yeah.
right. The contrarian trader who
Contrarians.
does the exact opposite. Well, it's common sense, because if the masses lose money, then you do the exact opposite of the masses. And our biggest flaw is emotional impulse when we're dealing with the market.